Welcome to the CRE Advantage. My name is Charles Williams. I am the managing member and owner of Pioneer Realty Capital. And today I have with me Mr. Christopher J. Parker. Mr. Parker is with Zions National Real Estate. How are you doing, Chris?
Doing well. How are you?
Good, good. Thank you for joining us today. So this is our third episode of our show. If you've been following, we talked last week about introducing individuals who are active in the commercial markets. So that's why we invited Chris in today to talk about Zions National Real Estate, the company that he worked for. A little bit of information about Chris. As I mentioned, Chris is the Vice President and Regional Director of Zions National Real Estate. Before coming over to Zions, he served as Vice President for Capital Markets at Marcus and Millichap. He started his career in 2008 after graduating from Arizona State University with a degree in finance. And so Chris has a 10-year history in commercial real estate finance. He's transacted more than, I guess he's been involved with, what, more than 300 transactions?
Correct.
Yeah, so he knows a little bit about the space. So we're very happy to have you on board with us to talk about your program and what role you guys play in the capital markets. So Chris, you work for Zions National Real Estate. I'm familiar with Zions Bank, but what's Zions National Real Estate? What's the difference between the two companies?
Sure. So Zions National Real Estate is a division within Zions Bank where we are a nationwide wholesale commercial mortgage lender who is focused on originating and purchasing first mortgage liens for owner-occupied as well as investor real estate.
Okay, well, good. So now, would you say there's a difference between the lending program within the bank as opposed to the Zions National Real Estate platform? Is there a difference there?
Yeah, there's a lot of differences. So our program is wholesale. So we work with intermediaries to source our business. We can lend outside of the bank's footprint, so we can lend nationwide.
Okay, very good. So what would you say is your lending niche? In other words, the asset class or the customer type that's just perfect for you. What's your niche?
Sure. So we have, basically I like to divide it into three different programs that we offer. We do SBA 504 financing. We also do conventional owner-occupied financing, and then we do investor financing. Our ideal client, we like experienced clients, a median Fico score above 675, multi-purpose properties, things of that nature. For a population, we like to be over 50,000 within a 5-mile radius.
Okay, well, very good. So you mentioned SBA 504, which I know that you and I know what that is.
Sure.
And how that program works. Can you tell us a little bit about the structure of a SBA 504 deal and what role you might play in the transaction that involves SBA 504?
Sure. So for a real estate deal with an SBA 504 loan, you can go up to 90% loan to value, and that is broken into two different loans. So the bank, our loan, we will go up to 50% on the first lien, and then the SBA will come behind us and finance the remainder up to 40%. So in total, you have 90% loan to value.
Okay, and so what kind of assets can you finance with that? I know you mentioned owner-occupied, but is there a limit to the types of properties that are owner-occupied that you can finance in that structure?
There's not a limit. Our bank has certain limits to where we will lend.
Okay.
So we like office, industrial, retail. We're not financing any gas stations or car washes at this time.
Okay. Good. So now what about new construction? Would you guys do new construction?
We do. We like new construction. We are lending on new construction for owner-occupied real estate.
Okay, very good. And so the fact that you're not on the bank side, but you're on your wholesale platform, would you say you could still be competitive with a bank?
Absolutely. We offer competitive rates. We have low closing costs. So there are a lot of advantages to going through our program.
Okay, well, very good. So now, there's a term that's used on your side of your business that many in our audience may not be familiar with, and that term is a correspondent lender. What is a correspondent lender, and what role might they play with your company?
Sure. So our group seeks approved correspondent lenders to work with that know our products, know how to underwrite our deals, that we can work with together to source our business. So we're not actively going to borrowers directly. We are going through correspondent lenders to source our business.
Okay, well, good. So if I were to kind of sum this up, a correspondent lender would be a third-party originator.
Correct.
So they're out interfacing with the client, understanding the client's needs and objectives, putting together the loan request package, qualifying the deal based on your underwriting criteria, and then they're going to submit that deal to you for approval and ultimate funding.
Correct.
Well, Chris, that's very interesting, and I can see why your product is very attractive. But tell me about your ideal client. I know there are things that you like financing. You mentioned a couple property types that you like. You mentioned some qualifications that a sponsor would need to have. But what's the perfect client for you?
So our perfect client would be that median FICO score above 675, experienced, good post-closing liquidity, good net worth. If it's an owner-occupied transaction, the business financials are good. The business is cash flowing. There's some excess cash flow there to weather a storm if something were to happen.
Okay. Now, Chris, you use some big words this time.
Sorry.
And I know there are people here are probably wondering what some of these words mean. So when you say post-closing liquidity,
Sure.
What are we talking about?
So your liquid funds, so your cash, your stocks, your bonds, stuff that you can readily convert to liquidity after we close the transaction. So if we're doing an acquisition and a client is buying a deal for $5 million, we don't want to see that they're using all of their liquidity to purchase this deal and they have no liquidity after they close the deal. That way, if something were to happen, then they have funds on hand to be able to weather the storm, so to speak.
Okay, very good. So in an earlier episode of this program, we talked to one of our underwriters that's here at our company, and we talked about the importance of good financial record keeping. And the reason why I wanted Chris to give more information about what's meant by liquidity is to discuss the importance of making sure those financial records are accurate. Because what happens sometimes is we'll get a personal financial statement, and it will show that there's a significant amount of liquidity on that personal financial statement. Does that ever happen to you, Chris?
Sure.
Yeah, it happens all the time, right? It shows that there's a significant amount of liquidity. But what are we going to do, Chris, when we get that financial statement?
Well, we always verify the liquidity, so we'll collect the bank statements to verify the funds are actually available.
Yeah, so it actually pays to make sure that the information that's on those statements actually reflect what the client has in the bank. Now, Chris, you talked about the FICO score needs to be above 650. You talked about the population. So we're not looking, your program does not target loans that are in remote locations. Is there any wiggle room on that criteria, or is that just kind of a general?
That's our ideal. That's our what we like to see. If the property or the borrower does not meet those requirements, but there's other significant strengths to the deal that mitigate it, then we can certainly look at that. We're here to try to do as many good deals as we can do that are fit our policy. So if we need an exception, we can certainly look at doing that. We don't want to let any good deals, opportunities go to waste.
Okay, well, perfect.
I've been a client of Pioneer Realty Capital, I guess almost 7 years now. They did a refinance of my business and got about 2.9, 2.99, which is a great rate because at that time, what was going on in the economy was crazy. But I was thrilled that they were able to do that for me. It was amazing how easy it was to go from the origination to the closing. I didn't have to worry about anything. They had everything explained to me, just had to sign on the line, and it was a done deal.
So really what you've just described for us, Chris, is your credit box, right?
Sure.
Every lender has a credit box, and not every deal fits in a credit box. So it does pay for the folks that you work with, your correspondent, those correspondents, to fully understand your credit box, right?
Absolutely.
So Chris, what are you doing to communicate those changes in your credit box?
Sure. So we have regular scheduled meetings with our correspondent lenders to update them for any changes to our program, to make sure that they're aware and up to date on all changes to the program.
Okay, well, good. Well, I tell you, it sounds like a fascinating program that you guys have. If it's the right deal, you guys are active on that deal, right?
Yes.
Sounds like you're competitively priced. You can be flexible where you need to be flexible. And you provide really awesome finance. And I know this for a fact because I've been doing business with Zions for a number of years. We've had the privilege of serving as a correspondent lender for Zion. So when it's a deal that they really like, they absolutely go after it. So Chris, for the benefit of our audience, we have individuals here who are thinking about purchasing their own building for the first time. Maybe they're renting right now. Or they're looking to become an investor in commercial real estate. In order for them to have the best opportunity of getting financed through your organization or an organization like yours, what advice would you give them or share with them?
My advice would be to speak with your mortgage broker or your correspondent lender sooner rather than later. Mm-hmm. Get in front of them now, start talking to them so that they can understand what they should be doing and what programs are available to them. Mm-hmm. I think you touched on it, and our program, while it is aggressive and very competitive, it's not the best fit for all product types. So speaking to your mortgage broker, your correspondent lender, they can advise you as to which direction is best for your situation.
Well, that's excellent advice. So to recap, we talked about your platform. You're part of Zions, but you're different. You're on the wholesale side of the business. You guys are competitive. Your products are aggressively priced. You're looking for deals that are in a population center of at least 50,000. Is that in a 5-mile radius? Or
correct.
In a 5-mile radius. You'll do owner-occupied and investment property. And we talked about the 504 loan program, where you're, in a sense, partnering with the SBA or the CDC. You're providing a part of the mortgage. They're providing the other part of the mortgage. And we talked about the fact that you guys not only do investment or owner-occupied property, but also investment property as well. And some of the qualifications that a person would need to meet in order to qualify for your program.
Yes, sir.
You've shared a lot of information with us. So we really, really appreciate that. And if you have any questions about his loan program or what you can do to qualify for a loan, a commercial real estate loan, then please write that in the comments below. And certainly you have our contact information. You can contact us directly and we can walk you through what you would need to do to qualify for a commercial real estate loan. This is by far the best time to own commercial real estate. Interest rates are at an all-time low. And so to purchase a property and put long-term fixed-rate debt on it could be a significant advantage and could save you a lot on escalating rent costs. So a program like what's offered through Zions National Real Estate could be a perfect fit for you as part of your business strategy. So again, thank you so much for joining us on our third episode. We look forward to seeing you again next week. we're going to continue our discussion about in the capital markets, talking to another one of our capital partners. Thank you very much.